Can I invest my own money? Let's cash in.
Finance for the everyday millennial. Hard-charging solutions. We provide an accelerant in the journey towards financial independence.
Welcome back to Cashing with Cassian, the financial forum for young professionals. We are continuing on with a topic that I've been wanting to talk about for a long time, and that is, what do you need to know to manage your own investments, and should you even try? I'm hoping that the answers I have will motivate you to take yourself and your money more seriously. Let's jump right in. My first question to anyone asking about money management is always, do you have a budget or personal spending plan? Don't worry if the answer is no. I'm here to help you, not judge you. If you're having trouble making ends meet, click the link you see on the screen and watch my video on the top reasons why most people are broke. In the video, I give some concrete answers and examples that can help anyone get a handle on their finances. When you start saving and investing, the world becomes your oyster. Most of us getting started investing when we open a Webull or a Robinhood account. These accounts often give you access to educational resources that help you learn how to invest. And this can be a great way to grow your knowledge. Having an occasional conversation with an experienced financial professional can be valuable, even for those who choose to manage their own money. A financial expert can provide objective advice, point you to investment opportunities you may not have considered, and help you develop a long-term strategy to save and build wealth. Once your investment portfolio is set up, you'll start receiving statements detailing your account performance. Here's an example of what your account statement might look like. This statement shows the total value of the account at the start of the month, and it was just a little less than $1,032,000. Account activity in the form of deposits, withdrawals, dividends, interest, income, and changes in the value of assets increased the value of the account to just over $1,048,000. That's a nice little increase. Now, take a look at the year-to-date figures on the right-hand side, and you'll see that for the year as a whole, this account has dropped by $52,000. Going forward, the assets in this account have to grow another $52,000 just to get the account back to the value it had at the beginning of the year. The statement also includes asset allocation details shown in the pie chart. This is the meat and potatoes of the statement because it shows how the cash in this account was invested. The investments in this portfolio are spread over a number of asset classes, which often indicates a well-balanced securities portfolio. Note that the largest slices of the investment pie belong to equities, shown in blue. Equities include individual stocks as well as mutual funds, index funds, or exchange-traded funds that invest principally in stocks. A little over 1/3 of this portfolio is invested in stocks. And stocks are often seen as riskier than other types of investments, but over the long run, they often provide higher returns. About 1/4 of this portfolio is made up of fixed income investments, which focus on preserving capital and income. Fixed income investments include less risky options, such as bonds, CDs, or money market funds. This account also includes holdings in cash, which are also fairly conservative investment choices. The graph on the right side of the page shows how this account has performed over the last 5 years. We can see that this portfolio had a small drop sometime in late 2015, but then made a strong recovery for the next couple of years. You see ups and downs over the next several years, which is not uncommon. I like to remind investors that markets are living entities. That is, markets respond to the forces around them. A hot new company might help stock values for an entire industry skyrocket, but at some point things tend to level off. When managing your money, it's important to take the long view and to expect both increases and decreases over time, as we see here. While you're in the early years of your career, you may not need to worry too much about market swings because even if your asset loses value, you have time to make up those losses. As you get closer to retirement, you might want to scale back the amount you invest in riskier assets as a way to limit your potential for loss. If you're ready to accelerate your journey towards financial independence, become a RINO today. At RINO Invest, we understand that investing is a learning experience. So we developed a financial ecosystem that is a one-stop shop for financial knowledge and support. Click the link you see in the description of this video now to open an account and join us. Subscribe to this channel for updates and click the bell icon to receive a notification when a new video comes online. Till next time, this is Cassian reminding you that it is always a good time to cash in with Cassian.